All right, so we had another big week. The markets were up nicely this week. We are within striking distance of all-time highs in the markets again. If we look at the S&P here, the S&P has shook off this downtrend pretty clearly. If we look at the week, we are up about 1.3%. If we look at the month, again, we're actually still up for the month. So we're right back in an uptrend, at least from what I can tell here. And again, the same thing goes for the NASDAQ. As far as Bitcoin goes, again, Bitcoin was down on the week, down on the month. Like I mentioned in the previous video, I think that, again, this is just, it's how Bitcoin goes, to be honest. And I think Bitcoin is even more, again, the one thing they say about the stock market is it will punish people as much as it possibly can on both ends, right? For when everyone's bullish, that's when it goes bearish. When everyone's bearish, then it goes bullish. And I think that that's just how it worked with Bitcoin. I mean, look at what happened right after the ETFs came out. It went down. And after the halving, down. Now again, within a month or so of the ETFs coming out, it did trend up, and that's when we got that big run up. We are about, a few weeks out from the halving, and when you look at the halving, typically you get that big uptrend. It takes longer than a month. Usually I think it's about 4 to 6 months, at least off the top of my head. So, and the reason for that is, again, we still have there's always going to be a massive amount of coins on exchanges and stuff. So that needs to be flushed out before we get that uptrend. I think we get the uptrend, I think, within the next few months. I think we're gonna get like a 2-3 month period where we go up 50%. I think that's going to happen within the next 6 months to maybe 8 or 9 months. So again, that's just my prediction. Again, obviously nobody knows. I don't know, but that's just my prediction because nothing fundamentally has changed. In fact, the only thing that's changed since the halving is the ETFs. A lot of these Asian countries have came out with ETFs. So why would you be bearish if that's the case? If anything, the exact opposite should be the case. So again, just to sum it up, I'm as bullish as I've ever been on Bitcoin. Although again, the strategy does not change. The strategy is simply just dollar cost average, right? And again, the same thing goes for the market. It's just dollar cost average into good stocks. If you get a screaming discount on either option, I will buy more, but again, the strategy still remains the same. As far as predictions for the market going forward, again, I did say we were going to see a pullback at some point, and I thought that it would be deeper than it was, and that did not happen. Right? I think it was only about 4 or 5% on the S&P, so not that big. I mean, in the average year, you do see usually the 10% is kind of that over-under on how big of a pullback you'll see in the average year. So honestly, the next move will be next week. We have PPI and CPI, and we have option expiry. But I think the big one's going to be CPI. If that CPI print is less than what's expected, we will see a new all-time high almost certainly. Again, we don't know if that's going to happen. For all we know, it will come in hotter than expected, and then we'll see a downturn. So again, nobody knows what's going to happen. My prediction is inflation probably stays right around where it is right now, barring anything crazy happening on either direction. But I think that the chances of going back to 2% or below 2% without a recession is unlikely. But the chances of it going up significantly is probably also unlikely. So that, again, that's just my prediction. I think that we will see a larger pullback than we did over the last month or so. The question is, does it happen next month or does it happen in the summer or the fall? I don't know. I think it all depends on inflation, because if inflation trends down, then very unlikely that we're going to see a significant pullback. If it trends up, yeah, it's going to happen. If the Fed starts to become hawkish, yeah, it's going to happen. If we get more banking troubles, yeah, it could happen. But my prediction is I think it's less likely than likely at this point. I think that inflation, it probably comes in right around where it's been. The market, we probably get a little bit of a scare, but then the Fed will come in and be like, hey, yeah, we're not worried. We'll take care of it. All the usual mumbo jumbo. So again, that's basically what I see happening. As far as earnings goes, NSSC, NAPCO Security. This is a company that I do have a small position in. They easily beat earnings and revenue, although they were down a little bit because of that, I think. So that's a little interesting, although they were arguably a little expensive where they're at right now. I think that this is a very interesting company. I think it's a very good risk reward. They do have a lot of potential. They are expensive where they're at right now, but that is significantly below its historical averages. So very interesting company, although they have absolutely killed it recently. Microchip Technology, another company I have a position in. Earnings and revenue about in line with earnings. They were down a little bit on that news. This is a solid company. I don't think they're great, which is why I'm not adding to my position, but this is kind of just a hold and see what happens position here. Palantir, again, a company that I do not own, probably never will because there's just too much hype around it, but I do watch it for obvious reasons. Earnings and revenue were about in line with expectations, and again, if you look at on the week, they were down pretty significantly because they lowered their guidance. So that's the reason for that there. Primerica, again, another one of my favorite companies, to be honest. Again, one of these kind of safer, for lack of a better way of putting it, industries, but again, the insurance industry is, if rates are higher, the insurance industry is going to do good because they're investing those premiums. And if bond yields are higher, then they're going to get more money because they're making more off those premiums. So again, free cash flow yield of 8.6%. Again, I really like this company. If we look at Realty Income, again, don't have a position here, although this is one of the most popular, if not the most popular REITs to hold. They did beat revenue. They missed their FFO. Again, I think that with a higher rate environment, it's going to be very hard for a company like this to do well. So that's why I'm not able to pull the trigger on something like this at the moment. BLD, Top Build, this is a company that if we got a pullback, I definitely would pull the trigger. They did beat earnings and revenue. They've absolutely killed it over the last year or so. If we look at the valuation, though, again, PE a little bit above, price to free cash flow a little below their historical averages. I don't think they're necessarily expensive where they're at right now, but I do want a pullback. Again, this is a good company though. If we got a 10% pullback, I would definitely look at buying a little bit here. ANET or Arista Networks, again, another company that I think is a phenomenal company. The problem is that they're just so expensive. This is one that, and the thing that frustrates me most is that I've been looking to buy this company for probably like 2 years, and again, it's never gotten cheap enough. And again, that's just the price you have to pay sometimes, and that's the discipline you need to be a good investor, in my opinion, is that you don't want to buy a company just because it's a good company. You got to make sure that the valuations are reasonable. And again, a 49 price to free cash flow, a 16 price to sales, you got to have some absolutely phenomenal growth to make it worth it based on those valuations. And chances are, no matter how good of a company is, it's not going to grow into that kind of valuation. AGO, a company I have on a watch list. Again, they did easily beat earnings and revenue. So again, that's good news for them. The next one, a company that I do have a solid position in is QLYS. Again, another phenomenal company. They did release good earnings. They did, and they raised their guidance, although they were down on the week. So there must have been more to the story that I'm missing here as to why they were down. So again, I still think they're a phenomenal company. Financial health, again, they're debt free. They're buying back shares. The growth is very good. They're projected to grow earnings 33% next year, revenue 14%. They are a little debatably expensive where they're at right now. Price to free cash flow of 23, price to sales of 10. I think they're about fair value where they're at right now, so I am dipping my feet in. My fair value probably like 155, 160 for a company like this. So I am dollar cost averaging where it's at right now. But again, be careful because it could go up 10, 15% in a week, and all of a sudden it won't be a bargain or even below fair value. The next one is Affirm, a company that I do not own, probably never will. But again, it's one of those hyped companies that I do watch. They did beat earnings and revenue, although again, if you look here, they're still losing money. So again, a general rule of thumb, unless you're willing to do copious amounts of research on a company, don't buy companies that don't make money. The risk reward is just 99% of the time, it is not there. And like I said, unless you're willing to do tons and tons of research, it's not worth it. The next one is LCII, a company that, again, I would buy if we got a pullback. They did release very good earnings. They were up nicely on the week, although they are below their. Sorry, this is not the company that I was looking at here. LII was the company that I was looking for. Again, Lennox International. Again, they're in the AC, the HVAC industry, for lack of a better way of putting it. They were up nicely on the week. Like I said, I do really like this company, although I am waiting for a pullback to buy them. Again, they are too expensive where they're at right now. Price of free cash flow of 32. I would want probably 10% for sure, maybe even 15% to dip my feet in here. But very good company nonetheless. The next one is ARM Holdings. Again, this is this was a recent, was it an IPO or was it a SPAC? I don't even remember. I think it was an IPO, but it doesn't matter. They did beat earnings, although they did lower their guidance. So the stock was down pretty sharply on that news, but again, they actually closed up on the week. So again, that's kind of interesting. Again, this name does have a lot of hype behind it. Looks like we don't really have complete data here, so I'm not going to speak too much on it. But in my mind, when it comes to IPOs, typically you don't want to buy them right after the IPO because insiders can sell after 6 months, and I'm not sure if it's actually been 6 months yet. It's probably close. I would always let the dust settle, wait and see how things go, especially when it comes to companies that have so much hype around them. That's just, again, my rule of thumb. The next one is Airbnb, ticker ABNB. They did beat earnings and revenue, although they did lower guidance. They were down quite a bit on that news. I think they're a decent company, although I've never bought the hype behind them. I think that there's a lot of room for the government to regulate them. Again, I think that you can definitely make a case for them, but I feel like regulation is something that is very concerning there. And I think it's hard to get a strong moat when you're a company like that. I think competition is very easy for someone to hop in and compete with them. WTS, a company I really, really like. They did release very good earnings. They were up a little bit. They're actually down briefly, but then they closed up on that news. Very good company, although they are expensive where they're at right now. Although they're actually right around their historical averages, but I would look to buy them around 190, even 195. I would buy them if it went below 190, even 180. That's when I would start to become really aggressive because I think it's a really solid company. BN, this is Brookfield. They did beat their earnings. They were up. They're right around their 52-week high. Actually, they are basically right at their 52-week high. I don't have a position. If we got a nice pullback, though, I definitely would take a position here because I think that they got a lot of potential. They definitely got a lot of potential. So the next one is MPW. Again, this is a popular dividend name. Earnings were on, but they missed revenue. Again, this company just continues to grind lower and lower and lower. I mean, on the month, they're actually up a little bit, but year to date, they're actually basically they're down a little bit. But I mean, if we look at the last year, they're down significantly. 3 years, they're down extremely significantly. Especially, again, they're losing money. They're actually losing quite a bit of money. Again, people buy it because of the dividend, but I mean, they're not even making money. So again, a company that's not making money, paying a 12% dividend, if that's not a red flag, I don't know what is. So anyway, that is earnings for this week. Like I say, next week we don't have it's actually a fairly quiet week, but we do have the CPI, PPI number, so that's going to be big news. So anyway, if you liked the video, please like, subscribe, comment, all that good stuff, and stay tuned for more.